Have you heard about some of the advantages that can come from financing your home purchase with a conventional loan? One thing that I hear often is that people believe that they will need to have the minimum of 20% of the purchase price available for a down payment to be eligible for a conventional loan, and that's not the case. In some instances, the required down payment for a conventional loan could be as low as 3% of the purchase price, and then could go up from there depending on the exact circumstances. There is, however, an advantage to making a down payment of 20% or more of the property's value. If this is the case, the requirement of paying for private mortgage insurance is waived, which could add up to some significant monthly and long-term savings. If the loan does have a requirement for private mortgage insurance, the good thing is that it won't be a part of the loan forever. Once your loan has been paid down by a certain amount, the payment requirement for private mortgage insurance will stop. The amount that you can borrow towards a home purchase is also higher if you're using a conventional loan. An increase to the maximum amount was recently announced actually for loans that will be made in 2022. The national baseline loan limit is now $647,200 for conforming conventional loans. That isn't to say that it's not possible to get a home loan for more than that, but if you were looking to get a larger loan, you'd need to pursue a different type of loan. Conventional loans are often made for 30-year terms, but it is possible to get a conventional loan for a shorter amount of time though, such as a 15 or 20-year term. Depending on what your goals are, a shorter loan repayment period could be the right choice for you. There are some things to consider when thinking about purchasing a home with a conventional loan. The general eligibility requirements of these loans tend to be a bit stricter than other loan types. One of these factors is the required minimum credit score. Minimum eligible credit scores are higher when applying for a conventional loan than they are with an FHA loan. The debt-to-income ratio is another item to be aware of when looking into this type of financing. The debt-to-income ratio is the relationship between your monthly debt payments and your monthly gross income. These ratio requirements can sometimes be stricter than other loan types, and this will depend on your individual situation. Conventional loans can be a great option for a lot of different reasons. If you're ready to start the process of working towards qualifying for a home loan, or if you just have some questions, or if you don't know where to begin the process at all, please reach out. I'm here to help in any way that I can so that you can reach your long-term home ownership and financial goals as quickly as possible.